Hello, everyone. Thank you very much for joining us today. My name is Keith Knabb, and I am the president and founder of Affordable Medicare Solutions. We are a large Medicare planning agency and resource center in North Georgia, and we are the largest provider of Medicare education services in North Georgia. I founded my company about 25 years ago, and we have thousands and thousands of clients. But we also do a huge amount of community service in education. I teach at all major hospitals. I teach nurses, case managers, social workers, financial planners, CPAs, and also families that are dealing with Medicare. The seniors themselves also have questions about Medicare, of course. But there's some interesting things that happen deep into Medicare. And one of these topics is a high income surcharge. A high income surcharge called IRMAA. So today, the topic of IRMAA and high income will be covered in detail. And this is being recorded for you to be able to share with your clients. And also we'll be updating it if the IRS has updates to IRMAA each year. So what is IRMAA? IRMAA. It is an income related monthly adjusted amount. When you have a fee tied to your income, that seems like a tax. It would seem like it would meet the definition of a tax. But they did not want to call it a tax, and they instead called it an increased fee for participation. And this is basically a backdoor tax on your high income. This is an amount that you and your spouse will pay in addition to your standard Medicare outpatient premium, Part B, and your Medicare drug premium called Part D. Now, Part D started in 2007 with the Medicare Modernization Act, and Part D penalties or surcharges started in 2010 with the Affordable Care Act. And these additional charges are meant to shore up Medicare's expenses and Medicare's budget and make sure that it stays solvent. These fees are determined by the Social Security Administration, who will notify you if you need to pay this surcharge. It is a rolling 2-year look back. It is looking at your income, not from 2020, but from 2018. And each year that updates for a rolling 2-year period. And it's the 2018 total income. We'll go over what that means. So how is this IRMAA determined? Well, they don't look at your adjusted gross income on your tax return. They modify it and add back certain items. So that's a total of even tax exempt interest. If you have municipal bond interest, that gets added back, even if it was tax free. Other non-taxable income, foreign income, other income will be added back. And the Social Security Administration looks at tax records 2 years prior to determine this IRMAA charge for you and your spouse. So it's not exactly line 37 on your tax return, but you can start there. And if you have any other income, such as Social Security income that is untaxed, you'll need to add that back in. Online, you can find a MAGI, M-A-G-I calculator just by Googling that term. So modified adjusted gross income. It is your household's adjusted gross income with any tax-exempt interest, income, and certain deductions also added back. So determining your MAGI is a 3-step process. Of course, you're going to figure your gross income for the year, and you're going to calculate your AGI, and then you're going to add back those items that are necessary. And it's easy to do if you use the online calculator. Now, these are the penalties. These are the surcharges that you'll be asked to pay. So it goes whether if you're an individual or a couple, and your Medicare outpatient Part B premium will change based on income as follows. If you're an individual, not married, it'll be $87,000 per year is your initial starting point. So if your income is below that $87,000, you have nothing to worry about. For financial planners and CPAs, this is very important because a person may think themselves that their income is low, and if you trade stocks or there is property sold or other things that happen that create a increase of taxable income, you have to warn your clients about this threshold of $87,000, or for a couple, $174,000, double the 87,000. So that, and it progressively gets worse. It's a progressive fee increase, a progressive tax increase. And so if you look at it, it goes all the way up to, on an individual, $500,000 and above. But for couples, it goes up to $750,000 and above. And you can see that it is a tripling of your premium. It goes from $144.60 this year up to $491. So really more than tripling. And then there's also the surcharge on the drug program. Somebody says, all right, I'm going to get a Medicare drug program. I need to get my drugs covered. Well, you also are going to have a surcharge there. It's not nearly as severe as the outpatient premium charge. But if you'll notice here, the filing married with separate tax returns, they make sure that people really can't manipulate this too much in their favor. I've seen you can actually wait till the end of the year to get married, maybe get married on January 1st instead of December 1st, and it'll actually help you if you're single. But once you're married, they pretty much have you, depending on, it doesn't really matter which way you file your taxes. So it goes up to $76 a month extra, $76.40 a month extra, plus whatever premium your plan charges. So if your plan charges the national average, which is $33, or the Georgia average, which is closer to about $25, that'll bring your premium up to about $100 a month to have a drug card. And some people say, I'm not so sure I want to pay that. And that's a deep discussion we need to have, because just because you're not taking drugs today doesn't mean that you or your client might tomorrow need a blood thinner that's $500 a month. So it's important that they really realistically look at this issue. Now, do you have to pay these premiums? Yes, but you can also appeal them. These additional fees and premiums, you can appeal the surcharges in a couple of different ways. There's a certain form that I'll show you, but basically it's a life-changing event scenario. You were laid off from your job, or you all of a sudden retired and they gave you a retirement buyout. If it's a one-time event, you sold the beach house and all of a sudden had a big capital gains that you had to pay, potentially they can reduce or remove the surcharge, but you have to provide documentation. You have to create a good, believable story to tell. And just like other appeals under tax situations, you want to be professional about it. Now, this form is called the Medicare Income Related Monthly Adjustment Amount Life-Changing Event Form. And so you can just check the boxes. Of course, you put your name and social security number there, and you do this for both you and your spouse. It could be that I got married, or I got divorced, or annulled, or I had a death of a spouse. I was either laid off or had other work stoppage, work reduction, loss of income producing property. Something happened there, loss of pension income, maybe a pension went bust, employer settlement payment, a buyout to help you retire. So you figure this out and you submit this form, and then you hope and pray that they accept it. Or there's three really possible outcomes. There's no harm in filing this form, but you can get approved, where they say, yeah, we agree with you. We're going to take away this surcharge, especially if the surcharge is only going to be applied for 3 or 4 months. Maybe it was just a temporary situation. Or they could just flat deny you and say, nope, we're not going to take off this. And then you would want to reapply the following year and restate your case and see if you can get approved in subsequent years. Or they might meet you halfway in the middle. They may give you relief and say, okay, yeah, we agree. Instead of charging you the highest amount, we're going to go down in the middle area and charge you a lower amount. We agree partially with you, and still will charge you a surcharge, but we'll take away some of the sting of it and reduce the cost. And you can appeal, like I said, every year or after any impactful event. So doesn't hurt to try, just keep on trying. Now, if you do have to pay this surcharge premium, your Part B IRMAA premium is added to your Part B premium automatically. That surcharge is. And the IRMAA for Part D are paid separately to Medicare. If you're with an employer plan and your employer is paying that, they will take care of it. But if you don't, for example, if you have a Medicare drug program, you're going to have to make those payments also. The Medicare treats these payments the same as other premium bills, which means If you don't make those premium surcharge payments along with the premiums, or if they're not collected out of your Social Security check, you could lose your coverage. They will consider you in a lapsed state and out of that you're not paying your premiums on time. So let's again recap a little bit. My name is Keith Knabb with Affordable Medicare Solutions, and my company has a staff of 9, over 100 years experience. We have plenty of people to help with all sorts of Medicare questions, but we also act as an aging resource so that people will call us, and clients and financial planners and other people will say, hey, I've got a client who's has a stroke and needs home care assistance or needs to move. Do you know a good senior mover? Anything that you or your clients need, just call my office at 770-945-5261. All of our services for Medicare planning are free to our clients. We charge nothing. We have thousands of clients. They don't pay us a dime to do our Medicare planning services. So it's very important you tell that to your clients. And you can also send them a copy of this presentation, which is also available at our YouTube channel. So go to youtube.com and search Affordable Medicare Solutions, and you'll see a host of different videos in there. And if you'd like to co-brand these, where we'll put your information on there so that your clients know it's from you and you use us as a trusted advisor, we're happy to update this presentation for you. Thank you very much. Have a great day.